Nick,
Vivian, what's up?
very important, credit myth buster. I continue to have clients who feel like, well, my credit score is not 680, and so they're stuck there. And I try to stay in my lane when it comes to numbers, so I'm going to hand it over to you.
Sure.
What does something look like if it's under 680?
For sure. So yeah, that's a very common misconception. You don't need to have perfect credit to buy a house. An FHA loan will let you go down to 580 with 3.5% down, and then you can even go down to 500 if you do 10% down, as little as. Sometimes there's extra requirements there, but you do not have to have a perfect credit score to buy a house. However, if you do run some numbers and we just can't make it work with where your credit is, we have a lot of resources for you. Sometimes it's very simple, paying down a credit card balance, or opening a new trade line, or adding yourself to somebody else's trade line. That kind of stuff can help get your score up fairly quickly. And if you're patient with it, and we kind of start the path and we start early and continue to keep in touch, there's plenty of ways to get you there.
Okay. Another question that came up. What happens when someone tells you, well, my credit is linked with Chase Bank, for example, right? And my credit score says that it's X. What's the difference between that and a true score through a lender?
Sure. So basically, these are two different types of scores. I've seen it in person. When I worked in the bank, we'd have people come up to me and they show me their phone and they said, this is my score. And then we'd have something else on the computer at the bank, right? So the reality is there are really two different scoring models. So your Credit Karmas, your Experian.com, your stuff you get from Chase, that's going to be through what's called the Vantage model. And then when you're looking at like a car loan, a credit card, a mortgage, that goes what's called FICO. Okay, so those two are going to give you a decent approximation of where your score is going to be. But the two biggest things I've seen that are weighed differently are revolving credit balance. So if you have a higher balance on your credit cards, that's probably going to affect your mortgage score more than it would your Chase score. And also age of credit. So if you have a bunch of new debt, which isn't necessarily a bad thing, right? You got to start somewhere, especially if you're younger or new to the area, new to the country. If you have newer credit, then that might also weigh a little bit heavier on a mortgage score or a FICO score versus a Vantage score. So it's just two different scoring models. They're all going to kind of follow each other, but it's not uncommon for those to be 30, 40, 80 points different. But as you see those Chase scores going up, typically your mortgage, your FICO score is actually going up as well. And the real difference is just the way that things are weighted.
Okay. All right. Well, that's good information to pass on to my buyers when they're a little nervous about what the score looks like, you know, on when it's linked.
Yeah, and the cool thing is when you're talking about mortgages, we can still do a lot with a soft credit pull that's going to be fairly accurate compared to your mortgage credit score. I just pulled one today. The soft pull and the hard pull were the exact same. So it can be true. And then if you're nervous or if we just identify some things that would help you get your score up, we can do that in real time. But it just takes starting the process.
Perfect.
All right.
Okay. So we can help you with that.
Thank you.